And we are live, Howard.
Welcome, everybody, to Momentum Monday. Ivan, how's your week?
It was pretty good, Howard. What about yours?
Great. Let's get right to it. We got a lot to go through. It's May 13th. It is.
14th.
We are in the sell in May and go away time of the year. I call it buy in May and go away. I think too many people overthink this market. So we're going to go around the world looking for trends. We are using MarketSmith charts, are we not today, Ivan?
Yes, we are, Howard.
They are a sponsor of Momentum Monday. They've taken Ivan under his. They've taken some 11 to the show, and so in using relative strength and talking about social relative strength, they've agreed to sponsor the show. So I'm excited to bring them on. All right, so let's get right to the charts, which is the first one to me that was interesting to me that I sent you was on the advanced decline line in the breadth of this market. So pull it up.
All right.
So Peter Brandt is an old salty trader, a good friend of ours, and really good technician. You don't have to be a great technician to know this. That is a chart. And Ivan, they can just see the chart, right? Not me.
Yeah.
Okay. So as Peter said, bear markets and stocks begin when a small portion of stocks prop up the general market. I think there's this misnomer that, FANG, which definitely has helped contribute to a bulk of the gains in the indexes this year. Everybody thinks that there's 4 stocks propping up the market. And what we're seeing from this advanced decline line is anything but. We have extremely good tape, hundreds of stocks setting up at 52-week highs, at all-time highs, setting up to break out to those 52 and all-week highs. And we'll go around the world and we'll say, listen, when you look at this, that is not how bear markets start. Now, doesn't mean things can't reverse from here, and today is the top, but this is not generally how bear markets look. So we are in a bull market. Ivan and I have been bullish for months here, continuously, and not much has changed, just some new names that we're going to go through. So Ivan, anything to add to this?
Something to add to Peter's words. It's not fewer 52-week highs that start a bear markets, but more 52-week lows. So we need to see a definite uptick in 52-week lows to talk about bear markets.
Yeah, and there's just not a lot. I mean, we've had so many reversals off lows from energy stocks to certain restaurant stocks, whether they were Chipotle's, just stocks ricocheting off horrible declines. The Biotechs bounce, semiconductors bounce from the 200 days. So there's just a lot of strength out there. And we're seeing it in the brokers. Let's take a look quick at China. We've been talking about China.
Okay, let me switch my screens real quick.
We can start with the S&P. It's up to you, Ivan.
No, we can go to China. That's fine. There were some big news from China this week, as President Trump is trying to help now save Chinese jobs as well, not only U.S. jobs.
I can't even figure out what his announcements and tweets mean. I can say that China's in an uptrend, and that's the large cap Chinese stocks.
Yeah, if we show the Chinese internet, it's looking a little better, and especially the big ones, Baidu and Baba. Let's go to a weekly time frame.
A great breakout. Baba is now getting back above 200, I believe. Yeah, there's Baba. Looks perking. Again, whether you like Alibaba or not, this is just one of those risk-on signs, And so I've said this about China for a while. It's gotten to the point where they don't need to cheat. The winners there are just winners. You can make fun of the business culture there for cheating, etc., but they don't have to. These companies are crushing. They have their digital wall around them. They have no competition from the United States, and they're free to come here and buy companies as Tencent bought a piece of Snapchat. So again, 10 years from now, I don't know how this all looks, but right now, risk is definitely on. You like the Tinder of China, right? Momo?
I mean, definitely needs some more time to set up properly, but it is working towards a good setup. And I think above 40, we can see some new money entering the stock and some momentum kicking in. I mean, from valuation perspective, I think there are a better deal than the US Tinder, the world Tinder.
Mm-hmm.
But the market doesn't look only at valuation. The market looks at growth and other threats.
Let's go back to Baidu and walk them through MarketSmith here and stuff that you would look at to confirm this breakout, other things from the earnings to relative strength.
Look, I mean, you remember we talked about Baidu last Monday when I said, that last Monday that's a good place to enter for a swing. Yep. And if you're a swing trader, right now it's a little late. I mean, the stock is already extended. It's up several days in a row. But mm-hmm. if you're a longer term trend follower, with a multi-month horizon, Baidu just cleared new all-time highs today.
Yeah.
So it should be on your watch list. I mean, maybe buy on a little pullback or buy a little bit, right now, and then more later.
People want to subscribe to MarketSmith. Show them how to read this chart beyond just the chart. So you've got the relative strength, you've got the earnings.
Yeah, on the chart you can see relative strength, 87. That's pretty high. That means I think it outperformed 87% of all stocks. I like that on one page you can see all the relevant information for one growth investor. You can see earnings and sales growth, especially in the last quarter. You can see a significant acceleration. Their earnings doubled on a quarter-over-quarter basis, and they continue. Despite their humongous size, their sales growth was still 36%. And when you look at the weekly perspective, I like the ability to see some other stocks that, according to MarketSmith, belong to the same sector. So you get more ideas, especially stocks that have very high relative strength. So you see Baidu's breaking out, or maybe there's some other stocks that belong to the same group. So you can find some interesting ideas here. I mean, Outcome's a little bit extended, but you can look at some other names. So that's one of the features that I like. And then on a daily, they just show the last 4 quarters earnings and sales growth. Growth investors look for acceleration in earnings and sales growth.
Got it. Okay, so let's go now through some stuff that's still working. The enterprise stocks are working. I think we're going to get.
Look, after the past couple of weeks, most of the momentum stocks are extended, and I mentioned that in my weekly review this weekend. That don't chase, don't assume that this is a completely new, fresh bull market where you need to be 200% leveraged and all in. I still think that this is a range-bound market, and you need to play smart, and you need to take partial profits on strength. And after the past 2 weeks, we saw some substantial moves, 10, 15, 20% moves in many momentum stocks. So now it's not the time to chase. Now it's time to take some profits. And as we saw today in the market, people took profits in quite a few names. But what's interesting about bull markets is that they are run by sector rotation.
Yep.
And
I wouldn't be surprised to see some money come out of enterprise. You could see a lot of air in these come out quickly, and you got to be prepared to buy these on 10 or 15% pullback. So like you look at Okta, you look at MDB, Mongo.
Yes, Zen, MDB. They're all pulling back, which is totally normal after the past couple of weeks. But what I wanted to mention is that when the general market is a little weak and it pulls back, usually biotech and healthcare outperforms. And this is exactly what we've been seeing since Friday. And this is why on Friday I tweeted, now all the tech stocks are looking primed for some consolidation, but biotech seems to be the next sector that will benefit from sector rotation. And so far today, this is exactly what we're seeing. for example, this one, CRSP, started to break.
The genetic stocks are starting to break out. So this is that CRISPR Therapeutics.
Yes, and not only them. I mean, last week you mentioned Illumina, beautiful breakout. It's been up every day, basically, since then.
Yeah, that company out of San Diego, we talked about it last week. It was up like $20 last week. So that was a good one. So there is rotation. It's healthy. I look at First Solar as another one that I keep watching in the energy space. Vicious pullback from all-time highs, but quickly that shook out a lot of people. So I think once, I don't know if that 81.72, I mean, that might have been an after-hour print, but again, this looks like a really strong base with another shakeout. So, if it hangs in this area, the next move up could be for real.
I mean, last week there was a big news regarding solar stocks. California announced that all new buildings need to have a solar roof. All new buildings starting 2020.
It's crazy that every parking structure and every building does not. Okay, so that's solar. Now let's go back to your list, Ivan, and let's see what's working and where the money's flowing.
Yeah, sure. I mean, as I said, it's biotech because most momentum stocks are pulling back a little bit. Let me share my other screen real quick. All right. Okay, so this is the latest SL50 list. As you can see, quite a few stocks, went down more than 2% today. When they go down more than 2%, they automatically are highlighted with red on the list, and you see a lot more red than green. Which should tell you that now it's not the time to really chase.
Yeah.
Personally, for me, I see more interesting setups in biotech right now, and I don't think you should be chasing tech and Chinese stocks after the past couple of weeks.
Netflix in the showing up back on the list this week is Shopify. 1 week on, we've got just a lot of software stocks. Twitter now showing up on the list, which I'm super bullish on. Have been for a while, so that's finally back on the SL50 list. So this market wisdom list, the first 10 ideas are always free every week, Ivan. But there's how much is this a month? $99.
It's only 99, and if you like markets, if you like money, I think it's a great investment that saves you a lot of time.
We're integrating that with our sponsor, MarketSmith, and I think MarketSmith's about the same a month, is it not?
I think MarketSmith, they have a free trial, 3 weeks for $20.
I'll put the link in my post. We'll before you send this out, Ivan, we'll put the link in the post.
Yeah.
I'll get that to you. All right, so Palo Alto Networks, a lot of the same names. I really do like Baidu here. It is a little extended, so maybe on any weakness, I think you got to be ready to pounce on a few Chinese stocks. Noah, another one of my favorite names. I don't know if it's on the list, Ivan, but that's like
it is. Well, definitely it is. Let me find it.
I see Splunk there. I see Zendesk, Okta, all the names. Yeah, Noah had another great day today. It's been on only 2 weeks, but it's up huge. So it's had a huge 2-week run here. I didn't even notice. Now it's over $60. So that's been one of my favorite on the Peloton. Twilio. So you can see where we're shopping. We like seeing this type of market where it's just obvious which stocks are working and they're starting even to show up. You can almost predict what stocks are going to show up. So it's software, it's China, it is e-commerce. Domino's has been a staple on this list. I think Akamai is a new name. It's kind of been a torture company. Let's take a look at Akamai.
Okay, let me switch back to my other screen.
Been on 2 weeks, but it's an interesting company. It's always been one of those companies that I've kind of tortured me as a long, but they're kind of a secret security play. I've been burned too many times on this, but I mean you can see that the ninth mouse may get the cheese here. 92 relative strength. The stock is beautifully set up, right?
Yeah, and they're finally growing again.
Finally growing again. I think security, outside of PANW, this would probably be a sneaky way to own the security space. Can you pull up a monthly, Ivan?
Yes.
Yeah, so you can see this stock's been basing what since 2006. Yeah. Anyway, so I think I got to take a look at that a little deeper and spend a little more time and make some calls. But this is one worth. It's really on the verge of a massive breakout.
I agree. I mean, the area between 78 and 80
showed up on the list. So this is one that we'll leave you with, unless there's a couple other names, Ivan, that you.
Oh yeah, I wanted to mention one more potentially big trend that might be starting. Sports betting might be legalized in the US.
Yep.
Why today we saw that big move in scientific games, which broke out to new all-time highs. Wow. And there's some speculation that which other stocks might benefit.
Well, that was already a leader, so that's just the impetus for it could be a great one. So yeah,
the market has been anticipating that definitely. And some people say that maybe some of the payment companies like Visa, MasterCard, Square, PayPal might also benefit out of this move. Square is setting up again. It probably needs some more time to set up properly for a swing trade or for a longer term trade. PayPal is also starting to look interesting again. I think if it manages to clear 80, we can see some momentum going for it. And
it's digested a big gain over the last 8 months. Yep. And these are so they're poor man's plays on betting. I guess more transactions and more people legally flowing money through the credit cards to the gambling side. So SGMS, was there any other pure play gaming?
I have to research. I have to research on that. It'll be interesting to see if the casino stocks are going to get hit, because there is another venue where people can gamble. So assumingly they'll spend less in the casinos, but we'll see how the market will react. I mean, we saw Wynn pulling back a little bit in the past couple of days, but then there are other stocks like I think Eldorado, which is holding relatively well. So I don't think that's a theme.
Stick with the software companies. I think in the market, there's just, if you're going to make money in the casinos, you're going to make more money in the software companies. So I think you go with pure. In the era that we're in, you go with software. Not I have anything wrong against casinos, but I don't want to own the buildings when I can just own the network and the money transfer site. So I think keep it simple. Well, that's cool. Okay. All right. So we've got gaming, we've got Akamai, we've got China, we've got enterprise software maybe going to pull back. We've got First Solar in the energy space. So we've shared a lot of ideas. The rotation could be into biotech. Anything else?
I mean, you wanted to talk about Luxottica, so let's finish with that.
Okay, an amazing. I wrote about it today. It's an amazing merger. I have not owned the stock. I think it's like an ADR now. Yeah, it's an ADR now. It's kind of gone nowhere. I don't think the story is so much about Luxottica as it is about the industry of the eyewear. We have, what's the name of the brand, the Silicon Valley brand? It's
Warby Parker.
Warby Parker. You can see why the VCs were so excited, and now there's like competitors in the delivery of contact lenses as well. But Warby Parker was started by the VCs to kind of disrupt this ginormous industry that's really controlled by Luxottica and this company they're now merging with that makes the frames. So howardlinson.com, I wrote about it today, but it's really an incredible, huge space. And the big problem of short-sightedness in the world because of us staring at our screens. So the amount of people that are going to be wearing glasses as a percentage is on the rise. And so this industry is interesting. I'm going to be, whether it's owning Google, which is probably a derivative play on all this. But there is going to be some incredible trends set off by this merger. because there's an underbelly in this space that Warby Parker alone won't fill. So this Luxottica merger is rather interesting because how quiet this $50 billion company has been put together. But it's taken forever to build these huge brands. But I think the problems associated with short-sightedness from us staring at our phones is just beginning. And so, you know, I don't know if this is more biotech or healthcare, but this is a huge trend that's probably undervalued. Just got to find the right stock. So,
well, it's in their name. It's a luxury play, and there's been some research which claims that there is actually no difference between a $20 sunglasses and $200 sunglasses, and the only way for a company like Luxottica to keep their margin is to own distribution and to buy all major up-and-coming brands, and they've been doing exactly that. They've been acquiring.
Yeah, but it's been holding back the industry. My issue is not to own Luxottica here. I have to be clear, is that there's going to be some massive disruption in this space around the cost models and around the margin models. And Luxottica is not going to be able to continue now that the cat's out of the bag and the demographic trend towards short-sightedness and the iPhones is really going to, at least, you know, you need to find some new trends here. And so the direct-to-consumer stuff has worked. There's a company that was backed out in New York. It's one of the fastest growing startups around delivering contact lenses. But I also think that Warby Parker is an interesting company that will lead to some other discoveries. But Luxottica has rolled up Ray-Ban, Oakley's, all the other ones. So there's no real opportunity there unless you just want the behemoth in the industry. But I think we're seeing a new trend emerge, which is like people starting to realize that the world lives outside of our screen and what are the problems being caused by the screen. And I think this merger is a tip-off to some interesting things. So if you go to my blog, you can read the article about the merger. All right, Ivan, we'll wrap it up. Thanks, MarketSmith, for supporting us with the weekly show. We'll include the link. I'll send you the link, Ivan, that people can sign up for MarketSmith and then your Market Wisdom product. And we'll see everybody next week.
Sure. Thank you, Howard.